Today is Thursday, June 15th, 2017, and it is now 9:05 a.m. I think we've given everybody enough time to jump on. As usual, any questions that you have, just type them into the chat box, and I will stay as long as everybody needs me. For those of you who are on my email list, I did make an important announcement last night, late last night, maybe around 10 o'clock, that I am going to be adding a brief 20 to 30 minute live session every single day at 4 p.m. Monday through Friday, or at least that's the plan for right now, because I've gotten a lot of feedback from people that either they tried to book me for a one-on-one meeting on my calendar, and I was a week or 2 weeks out, booked out, and or they had a question that really needed to be answered on a Monday and they couldn't wait until a Thursday. So what I am going to be doing moving forward is in this Facebook group here, Questions for Tom, every day at 4 p.m. Eastern, I'm going to be live. And so if you have questions on a daily basis, you can jump on. You don't have to jump on every single day. You can jump on when you need help, or if you feel like just jumping on just to see the questions that everybody else has. So I am going to be doing a trial run of that today. So essentially I'm going to be doing the same exact thing that I'm doing right now, but only for 20 to 30 minutes, and it's going to be on a daily basis. So for those of you who are around at 4 p.m., do me a favor, just hop on. I just want to check out the technology because the technology is going to be a little bit different. Right now we're on a GoToWebinar call, so I can actually see who's on, who's not, and I've used GoToWebinar extensively, so I'm really familiar with how to use it. The new technology that I'm going to be using is Facebook Live, so I'm literally going to be coming in here, clicking live video. You guys are going to see me, and you guys are going to be able to talk. Not talk, you're going to be able to type just like you are now, but it's going to be on Facebook. So definitely, if you're around, hop on at 4 o'clock. And then moving forward, because I'm going to be traveling to Omaha, Nebraska to visit somebody that is a mentor of mine in the real estate brokerage business. So I'm going to be gone Friday, Saturday, Sunday, Monday, Tuesday. And so if everything goes well today, I am going to be starting this next Wednesday. So next Wednesday, June, 21st? Yeah, so starting Wednesday, June 21st at 4 p.m., I am going to be live every single day on Facebook. So the first question came in by one of the people that's already in the group, and the question is, in the 10-week agreement, what does it mean every listing that is taken is 100% your profit to keep? So what that means is that real estate brokerage law states that you have to be a licensed real estate agent to take a commission. So because I'm not licensed in any other state besides Massachusetts, New Hampshire, and Rhode Island, I cannot take a fee, even if you get a listing, even if it's from a lead that I generated, even if it's from a lead that I coached you on. So if you do get your real estate license and you take a listing, that is 100% yours, and the fee, the success fee that you would normally pay me on an investment deal is not due. So hopefully that clarifies that. Natalie, quite a few wholesalers that she knows locally have had success selling rental properties to out-of-state buyers, especially on the West Coast, and she wants to know what the best way to build out an out-of-state buyers list for this purpose. And so what I mentioned to her already, but I'm going to go into a little bit more detail on that now, is that, so Natalie, by the way, is in St. Louis, Missouri, and there are a few markets across the United States where this works really, really well. And it's funny because for the people who live in a market like hers, you think that you can always, in any market, buy a single family or a two-family, and as long as you get it for a decent price, you would be able to cash flow. But for someone like myself, who's in Boston, or someone like Mike Horsley, who is in Napa, California, we can both attest to the fact that in our markets, it's almost impossible right now to buy anything that cash flows. Doesn't matter whether it's a 2-family, 3-family, 4-family, 5-family. The market is so hot and our prices, our rent to price ratio is so high that it's nearly impossible to buy a cash flow property. And because of that, people in my market that really like cash flow properties are looking in other markets. And that has happened to such an extent that whole entire companies have spawned in areas where you can still cash flow. So there's a couple of companies that do this really, really well. The first is called Memphis Invest. They're probably the biggest. So if you go to memphisinvest.com, you will see a company that has done this really, really well. And in Memphis right now, you can buy a single-family property, put a little bit of money into it, and make $100, $200 a month. And I don't know the exact numbers in Memphis, but I know that you can buy a single family for under 100,000, put 10 or 15 into it, and then get $8, $9, $1,000 a month in rent. And so these companies, what they do is they basically mass produce that and then sell it to people like myself who are in markets that can't cash flow right now. And so if you want to take another look at Memphis Invest, they are the best. Another one that's really good, that's done the marketing really well, is called Morris Invest. And I'm actually not even sure where he's located. Let me just see if it says right on his website. But for sure, he's in a market where you can still cash flow really well. And building up a buyer list for these type of properties, that's a whole business in itself. And so it's not quite as easy as finding a cash buyer locally in your market, because again, she's in the St. Louis market. So all you'd have to do to find who's buying properties in the St. Louis market is literally go, sell my house fast, St. Louis. And you'd be able to find some of the the biggest companies that are buying properties there. So unfortunately, you can't do this quite as easy for people that are buying properties out of state, and it's a fairly niche market. But what this company, Morris Invest, does is they do a lot of Facebook advertising. So the same way that a lot of you probably found out about me, I run Facebook ads to a specific audience to attract the type of people that I want to see my ads. The company Morris Invest does exactly the same. And let me see if I can just show you an example of that. Not to go too deep into this particular topic, but since the question was asked. So this site, by the way, it's called addicted.io. You can see what type of Facebook ads different people are running. So if you put in here, let me just see if I can put them in. Yeah, so like here's like the type of ads that he's been running is turnkey real estate right for you. This is an important question to ask, blah, 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 blah. And so this is one of the ways that he is specifically building his list. So you can actually see here an example of one way that he's building his list. But to really boil this down really simply, it is an entire business in itself, and it's not something that you can kind of do half-heartedly. It's actually more difficult than finding a traditional cash buyer. So it would be something that you would really want to have to focus on, and I could help you with that, but it's not going to be something that's going to happen really quickly. All right, Mike over in Napa, I have a property that has issues from a single-family residence view, but it's on 1 acre, 1.5 acres, 6 on a corner that could be great in a commercial sense. Busy corner with an established muffler tire store across the street. Developing this would take time. I can't do it. Is my only viable option to try and wholesale if I get it under contract and advertise it as such. Yeah, I mean, I think like a project like that, when you are a newer investor, is going to be really hard to pull off yourself. There are multiple variables there, zoning issues, financing issues. Uh, this is something that where I'm at, I don't even know if I would do it because I could probably pull this off, but it would go so far out of what I'm really good at that it wouldn't be as profitable as it should. So anytime I think that you get, um, especially in the beginning stages of your investment career, anytime you get a lead that's not a cookie cutter deal, you want to wholesale that. If it's not, the traditional single or multifamily property where you can easily just go in, put 20 or 30 or $40,000 into the property and then just resell it, I would try to stay away from that. I think the worst thing that you can do is do some sort of really niche type of project yourself on day one and struggle with it. So I would definitely try to wholesale that if you got it under contract and advertise it as exactly how you mentioned it. Um, there is definitely a chance that um, it may be worth more still as a single family. So I would not necessarily 100% discount the fact that it couldn't work as a single family. Um, but I would definitely not do this deal yourself either way because even as a single family, it's going to be on a major road and it's not going to be super desirable. So I would definitely try to wholesale this deal. All right, Frank, I posted this in the Facebook group just now, but in addition to following up with the leads I'm calling equity owners, okay? That's definitely a really high impact activity, so that's good. What is the best way to start the call to grab their attention right away? I don't know that there's any way to really grab their attention. I think you just need to get through it, get through as many of those calls as possible. I don't think when it comes to marketing in general, it's not necessarily what you say, and it's not necessarily how pretty your letter is or how nice your ad is on Facebook or Google or necessarily what you say on the phone, but that you're doing it in volume. So I always caution people to not get too caught up in scripts or what their ad looks like, even though there is importance to that. I think the most important thing is actually getting through the volume. Um, One resource that I would turn you on just to give you an example of like how somebody else who's super successful is doing this. Let me just see if I can find this for you. So this guy here, Greg, now I'm drawing Greg McDaniel. So Greg McDaniel is a super successful agent out of California. He's a friend of mine, and he goes live every single day on Facebook. I don't know what time, 14 hours ago, so maybe 6 o'clock Eastern, 6 p.m. Eastern, um, 3 p.m. probably your time, Frank. But so he goes live and he actually does his cold calls on Facebook Live every single day. And I think watching him would probably be helpful for you, even if you just watch him once. Like you can go on his page here. If you just type Greg McDaniel into Facebook, you can listen to all his calls. And I think what you're going to see is not necessarily that he's grabbing their attention, but that he has pretty good skills when it comes to objections that they might have. So I think the objection handling is more important necessarily than what you say to grab their attention. Like, what do you say when they say X? What do you say when they say Y? But that's going to come naturally the more and more that you do it. So I would definitely check him out, listen to him, listen to how he's doing it. He goes live, like I said, pretty much every single day. Here he is doing calls again, doing calls again. So check out what he's doing. He's pretty good, and I think that'll help you. All right, in follow-up boss, what do I do with the lead if they say they are not interested in selling anymore? So, I would always first ask, um, are they permanently not selling or are they not interested in selling right now? So I think the biggest mistake that we can make on leads is assuming that making assumptions with what the lead is telling us. So you always want to press them for a little bit more information because I have had this happen to me multiple times where somebody tells me that they're not thinking about selling their house anymore, and I'll just ask a follow-up question and I'll say, okay, is that permanent? Are you thinking about selling in 3 months or 6 months or in a year? And you'd be surprised at how many people will say, well, yeah, I just wasn't thinking about selling, in the next month. I'm thinking about selling in August or October or December. Because really you want to qualify the leads to the extent you want to figure out when the next time you're going to be following up with them should be. So if you're going to be following up with them, if they tell you never, I'm dying in the house, I'm never ever going to sell, it was a mistake, I didn't mean to fill it out online, my nephew did it when he had my phone, something like that, then I might call that a dead lead. But if they just give you kind of not really a good response, then I would always push them to see when they may be thinking about selling. And so what he said as a follow-up there is they hung up. So when somebody hangs up like that, they're not a hot lead, period. Like, they're not on the cusp probably of selling, or they're not necessarily on the cusp of working with you. So what I would do if somebody just kind of brushes you off and gets you off the phone really quickly is I would put them on an email only action plan in Follow Up Boss. So the way to do that, if you go to Follow Up Boss, let me log in. So if you go in here and you go to action plan and you put them on an email only action plan, that'll at least stay in front of them from an email perspective. And then I would probably put them on a twice a year action plan so that you're reaching out to them by phone twice a year. And so between that and the call, at least you're kind of somewhat staying in front of them. But for the most part, statistically speaking, that person probably is not going to end up turning into anything. And so when we're working leads, it's always a funneling process. So like, at the very, I wish I could draw on my screen right now, but at the top of the funnel, say we have 50 leads. All we're looking to do is push the leads down the funnel. So you're going to get 50 leads. And out of those 50 leads, maybe you only talk to 25 of them. And out of those 25, you only meet with 15. And out of those 15, only 10 are really selling. And out of those 10, 1 to 2 are willing to sell to an investor, and the others retail. So I would try not to get caught up in the ones that are bad and focus more on the ones that have potential. So on one like that where someone hangs up on you, they don't seem super interested, more likely than not, you're going to basically, for the most part, when you put them on an email only action plan or a twice a year action plan, you're pretty much removing them from your funnel. So that's what I would do with that. All right, Mike. There are some beginning signs in my immediate market and some surrounding cities that the market is slowing and slightly retreating. Definitely more in the range above the median price. Wholesaling should still work with less risk. Even quick cosmetic fix and flips below the median price. Anything that we should look out for signs that the market might be at a top. Will it be easier to find leads once we top? Okay. Do we have to be more careful? All right, so there's a lot of questions in there. The first thing is, number one, we always have to be careful. We never, as a real estate investor, you want to understand the market, but you never want to be in a position where you're basing what you're doing on projections of what you think will happen to the market. Because that's where we really get caught up and we get burned. Because the reality is that if we look at where the prices have been for the last few years, prices should have already probably theoretically topped out. So, if I were to have personally said, where do I think the market is overvalued? I might have thought in 2015 that it was overvalued. But if I based what I was doing based on what I thought was going to happen, I would have missed out on 2 really, really huge years for us. So you want to know what you think is going to happen, but you always want to be careful. And so how do we do that, right? So how do we be careful? The first thing that we do to be careful is only do quick projects. So the project, Mike, that you mentioned at first, where you're talking about doing, a huge development deal that's going to take a long time, it's going to take permitting. The problem with these long, extensive projects is the market that we are buying in is going to be different than the market that we're going to be selling in. And so if the market that we're buying in is different than the market that we're selling in, and the market goes up during that period of time, let's say during a 1 or a 1.5 year period, we're happy because we have capitalized on that market appreciation. But the reverse is also true. So if we buy in one market and then the project takes us a year or a year and a half and we're selling in a totally different market, now we're upset because we've lost pricing. So so number one, you only want to do quick projects. Okay, so what do quick projects look like? Well, by definition, a wholesale is a quick project. So we're always safe, on wholesales because we're putting a property under contract for very little money, and then we're turning it around, we're selling it to somebody else. So it does not matter. There's no risk on a wholesale for you as the investor. So wholesales are always going to work. If you knew for a fact that the market was going to crash, say tomorrow, then I would only wholesale. But again, we never will be able to predict that with 100% certainty. So we're going to wholesale and we're going to do quick projects. So quick projects are projects that we can buy, renovate, and resell in 2 to 4 month period. So real estate's a lot different than the stock market, and people understand what a falling market looks like the most because of the stock market, because the stock market can crash 10% in the matter of a week. The real estate market actually cannot do that because there is no way that change can happen that quickly. So what happens typically with the real estate market is that it can fall, but it tends to fall a little bit slower. And so that's why if we're buying, renovating, and selling in a 2 to 4 month period, that means that we're going to be buying and selling in the same market, right? Because real estate market doesn't change in 2 to 4 month period. So again, I do agree with you that we're at the top. Bubbles can go on for a lot longer for a lot of different reasons, and it's impossible for us to predict when it will end. So my advice would be wholesale and do really quick projects, and don't look. That's another reason why your initial project I would stay way away from, because not only is it a longer project, but it's also not a cookie cutter project. So cookie cutter projects that are quick and wholesales are the way to go. Whitney, once I'm a licensed agent, what's the best way to handle disclosures in direct mail, website, etc.? What are some key phrases to use to stress that I'm an investor, but also can list if selling direct isn't for them? All right, you don't want to do that. You never, ever want to have 2 different marketing messages anywhere. So you never want to say, I can do this and I can do that, or I can do these 10 things. The human brain can only absorb one marketing message at a time, and conflicting marketing messages also do not work very well. So for example, as an investor, you're basically saying, sell your house fast for cash, take a discount. And as an agent, you're basically saying, get your house ready for sale, go through an inspection, have a longer sales process, and get top dollar. So you can't really say two things well together. And because people get bombarded with marketing all the time, the more things that you try to put in front of somebody, the less they're going to see anything. So you always want to go with the highest, the most impact message that you can. And so if I had to pick between somebody who's sending me a postcard that says, let me do a market analysis, I'm a real estate agent in the area that has sold 10 properties, or I'm a cash buyer that can give you an offer within 24 hours of you calling me, no commission, no contingency, no inspection, you're going to get way, way more of a response from the cash offer letter. So I would always go with the cash offer letter, and it's really, really easy once you get somebody face to face, if they don't want a cash offer, to then explain to them, well, you don't want a cash offer, the only other option for you to sell is for you to get your property completely ready for sale, make it nice, go through inspections, go through contingencies, have a longer process, etc. So, so I would do one marketing message, and I would make that marketing message the selling fast to an investor for cash. All right, another question. I'm not a real estate agent. I'm not confident I could even fill out a purchase and sale agreement in the event I am able to make that offer. Secondly, I was told that when I write a check to the seller, I should actually have it done via an escrow company. I didn't see anything like that when I was in the training videos. Am I missing something, or am I making this too complicated? You are making this too complicated, way too complicated. So it's really, really simple. The reason that we have escrow companies is so that in the event of a contingency, that person cannot keep the money. So in a traditional real estate transaction, say that you're giving somebody $10,000 as a deposit with the purchase and sale, with the contingency that you have to get a mortgage. The reason why you don't just give that money directly to the seller is because if for some reason you can't get the mortgage, you then have to go right to that seller and get the money back. And in theory, that person is going to make it a little bit harder for you to get the money back than would, say, an escrow agent or an attorney who's holding that money, who's going to be an impartial third party. So when you're going out and you're giving $100 or $200 as a deposit, it doesn't matter who holds it, because you're not going to get that money back either way, right? And you don't even want to try to get, if you tell somebody you're going to buy their house cash, close in 30 days, and then you can't perform, you don't even want to go back and try to get that $100 or $200. So you're binding it with a small amount that you don't care about. They're holding it. And in terms of filling out the agreement, what I will do, because I do think there is a need for this, is I'll fill out one of them for you and that you can use as a template. But again, in terms of like overcomplicating it, you could have a contract on a napkin, literally, and it would hold up in court as long as both parties have signed and the agreement is in place. So all that you need, I mean, again, like if I didn't have a contract with me, I would write this literally, I'd write this on a paper plate and get them to sign it, because it would hold up in court. So all that you need is the purchase price, what you're giving them for a deposit, date of closing, address of property, signed by buyer, signed by seller. If you have that, you have a contract. So I will, to make it easier for you, I will fill out that contract and make it like completely simple. But that's all you need. The reality is when you get a motivated seller, they are going to really want to sell to you, and they're going to take your offer, they're going to sign the contract, and that's going to be the end of it. I've had times where one of my agents, somebody went out, they filled out the wrong form, or they filled it out the wrong way, as long as both parties want to close, the deal is going to get done. The issue becomes for you where you don't want to make a mistake, because this is where it backfires on you. If the form is not filled out correctly, and then the seller decides that they want to back out, and you, for example, didn't give them a deposit, or the address of the property is not on the contract, then when it goes in front of a judge, they will say that you don't have a valid signed contract. So, but let me get that to you. Let me get you that template so that it can make it really easy for you. But don't overthink it. You just want to make sure that you get it signed, and you want to make sure that you give them a deposit. Follow up to that. In the event I want to list the property, should I find a local real estate agent? Yes, until you are licensed, you should find a local real estate agent for that. Like we talked about a little bit, if you're not licensed, get licensed as soon as you can. You're gonna make so much more money by being licensed, and you're gonna be able to do more deals and get bigger return on your marketing money. All right, so Frank, I hit that question. Got a couple of member requests. All right, Carol, asking a question about, she knows that there's a bank-owned property in her neighborhood. She knows that it would be great for a fix and flip, but she can't get in touch with the owner. And so what I responded to her is that once the property becomes bank-owned, once the bank actually owns the property, the only way that they are going to get rid of that property is by listing it on the MLS as an REO. And so by default, that property, pretty much 99% guarantee that we're not going to be able to get a good enough deal on it for it to be worthwhile for us. And so a vacant property that's bank-owned, 2 doors down from you, seems like, wow, this really should be a great deal. Why doesn't the bank want to sell it to me? Why won't the bank return my call? You'll never get in touch with the lender, and they go through the same process every single time. And so the reason why banks sell or don't sell a property at a particular time, there's a lot of reasons for it, and I don't want to go into too many specifics, but the long story short is they don't always sell a property the second that they take it back. It can be a year, sometimes it can be 2 years. There's a property that's not too far from where I live that has been vacant and bank owned for 5 years now. And so there's no way you're going to be able to touch that lender, and once they decide that they are going to put it on the market, which they will do, they will list it through a real estate agent, through the REO process, and we're probably not going to get a deal on it anyways, so I would cross that off your list. All right, Cindy, yeah, this happens all the time. So when a lead, bottom line is, some people fill out forms, or they respond to cold calls, or they respond to mailers, or they respond to door knocking, they respond to marketing messages, and they don't really want to sell, but they think that as an investor, you may be bulldozing the whole street, and they may be able to get more than fair market value for their property. Or when we call them, they may say, hey, look, I'm not selling, but blow me away. Make me an offer, blow me away. And so the biggest thing to understand when somebody's asking way too much for their property is, are they really selling? Okay, so if they're not really selling and they're just telling you that they'll sell if you blow them away, that's not going to work, because obviously as investors, we can't blow them away with the price. And even a retail buyer isn't going to overpay for their property by that much. So if it's really only worth $500,000 and the person's asking $2 million, that's just not going to happen. So I would really push further to see, like, are they really selling? Where did you come up with that number? Okay, I don't really want to sell. If you blow me away, I'll sell it. So you just need to get down to whether or not they're really selling. If they are really selling, then I would pursue that lead, because I have had people that just had no idea what their property was worth, and they were just dreaming. But at the end of the day, they did need to sell. So once in a great while, you will be able to convert one of these into a deal. But again, talking about, like, this, where did this go? That little kind of funnel spreadsheet, not worksheet, that I had up there, it's not going to be one of your hotter leads, but I would still push them to see if they are selling. Yeah, leads. So Hugo, any lead that is currently listed by a real estate agent, again, this is another example of a lead that's not hot. Probably same percentage of people that want way more for their property sell to us as people that are currently listed. So what typically happens when a property is listed and a seller fills out a form online saying they want to sell fast is that their property has typically been sitting there for a while. So maybe they listed their property and 2 or 3 months have gone by, and either they haven't gotten an offer, or they've gotten an offer but it hasn't been high enough, and they're hoping that we're going to come in and we're going to pay them a certain price. About 5 to 10% of the time, that customer is so fed up that they will sell to an investor. And so at that point, we would go directly through the agent, make an offer, and 5 to 10% of the time, they're going to accept our offer. 90 to 95% of the time, they are just going to be hoping that we're going to pay somewhere close to what the property is listed for. And of course, in that event, it'll never work for an investor. So anytime that you get a lead where the property is already listed, I would give a hard discount statement. And a discount statement is really saying upfront, look, we're investors. We need to get the property for a discount in order for us to make money. Are you really willing to take a discount? And now I would never give that discount statement if the property was not listed. I would give it every single time when the property is listed, because you really want to screen those a lot harder. So I would give the discount statement, and if they say, oh no, my property is listed for $200, I wanted you to pay $195, I would just simply explain to them that that just can't happen as an investor, and if anything changes, let you know. But if they say, oh yeah, my property's been sitting there, I can't wait any longer, I would be willing to take a discount, then I would go out there, look at the property, and make an offer. All right, Frank, we talked about this. That was just an error. All right, Natalie, this is an important one that definitely is worth covering. She mentioned, are there any circumstances where you would ask for an inspection when submitting a contract? Answer is never, ever, 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 ever. Because when you're submitting an offer, all you're putting up is that earnest money, that $100 or $200. So you never want an inspection, because the worst case scenario is that you lose that small earnest money deposit. And so what happened to her here is exactly why you don't want to do it. So she didn't get the deal because somebody else came in and offered a no inspection deal. So in fact, the person got it for less money. So that's exactly the reason why you don't want to give an inspection. As soon as you say inspection to somebody who's a motivated seller that wants to sell cash, you're going to lose that deal. So in this case, it seems like another investor got the deal because of the fact that they did offer that no contingency. So again, you need to get really comfortable with the fact that you're not going to be 100% sure about the property the second that you put it under contract. You're going to have to back out of a certain percentage of the deals. Obviously, you want to limit that as much as you possibly can. You don't want to enter into a contract where you know there's a 99% chance of you having to back out. But if you're pretty sure it's a deal, I would sign it. Worst case scenario, you have to back out. The other thing about backing out, that I've told this story a few times, but half the time when you go to back out of a deal, the seller will say to you, well, what can you do? So let's say that you put this property under contract for 200,000, and then, you know, you decide that for whatever reason it's not a good deal. When you go back to that seller and explain to them, I made a mistake, the repair costs were more than I thought, I'm sorry, I apologize, half the time they're going to say, well, we have it under contract for 200, what can you do? And so it's quite frequent that when you do that, you'll then be able to get it for the number that you need. And again, just from a negotiating perspective, you're in a much better position after having already had that property under contract to get a discount versus what happened here where you lost this deal. Now it's under contract with somebody else. It'll never come back to you. So that person is going to close on it. They're going to make money as opposed to you putting it under contract. And if you had to back out, you might be able to renegotiate down. Yeah, Mike, we talked about this. Definitely, if someone is not responsive and the property's close to you and you feel like there's opportunity for a good deal, I would definitely door knock. And I guess I didn't even see this, Mike. You must have already followed up. They're not ready to sell now, but they're interested in selling at some time. They didn't want to use an agent, so perfect. I mean, you know, this isn't a super hot lead because they're not ready right now. But when you're talking about building up your funnel over the long haul, you have to have deals in your pipeline at all times. So this could be a deal that happens in December of 2017, or it could be a deal that happens in March of 2018. And you want to continue to build your funnel of deals like this so that when the time is ready, you're going to be very happy in March of 2018 that you did knock on this door and that you continue to follow up during that period of time. So Hugo is talking, I think, about wholesaling a deal. If a broker asks you if they'll find a buyer for the deal, how much would you give them? Yeah, so you always have to cut in the agent if they're bringing you a buyer, or else they're not going to bring you a buyer. So at the end of the day, it has to be a win-win for every single party involved. If you try to cut anybody out of a deal, then the deal probably won't happen. So what I recommended was the 2% of the total purchase price, which is kind of customary, 2 to 2.5%. And yeah, if they can bring you, a deal, a lot of people get caught up with they want to avoid commissions, both sellers and investors. But that's really not the right way to look at it because, if let's say you have to pay an agent, let's say the property is a $500,000 property, and you have to pay an agent 2%. You always want to look at the net. So if an agent can bring you a 520 offer, but you have to pay the 2% commission, or you get a 490 offer on your own, yeah, why would you not take the 520 offer all day long, pay the $10,000 net to 510? So it's all about, the net to you. The net to you, the net to your seller, how can you maximize the net? So, the 2% is just a general thing, but if they were to come to you and on this particular deal with these numbers, they came to you with a 550 offer and it was a 4% commission, then you go with that. So just really, how do the numbers work the best? All right, Frank talked about lead providing a bad number, but responded to the email. Yeah, I don't know why some people are afraid of talking to you, so they'll just put in their email address, and when they do that, you just send out an email. But yeah, the point here, I guess, was that you never want to give a seller an offer over the phone. You will get sellers here and there that will say, email me the offer or mail me an offer or give me a ballpark over the phone. But you really can't do that. It's not fair to you. It's not fair to the seller. Um, from one house to another, there can be $100,000 worth of work differential. The ceilings could be low in one house. They could be high in the next house. There could be basement space that doesn't show up on public record, but you get there and it's a finished basement. So to give an offer over the phone or to give an offer over email, it's always going to be wrong. And so a lot of sellers will say things like, well, just give me a ballpark. But a ballpark can be off by $100,000. And that's what I tell people. I say from one house to another on the same street, depending upon the condition, the size of the rooms, the height of the ceilings, is there additional unfinished space? Is your house a corner lot and the next one is, facing the highway? So you really can't realistically even give a ballpark, and I've been burned on this both ways. I have given ballparks that were too low, and then a competitor of mine buys them for $5,000 more, and I could have paid the $5,000 more had I actually got inside the property. And I've also given ballparks where I said, oh yeah, I can pay you your asking price. Let me get out to the house. I'll sign you right now. And then I get out to the house and I can't pay that pricing. I'm sitting there like a fool, feeling really, really guilty, telling the person I have to pay them $30,000 or $40,000 less. So it never works out. It just never works. But the more important thing, and other than the fact that you can't get the number right, is that you're not going to be able to build rapport with the seller, and you're not going to be able to bond with them, and that's really what you need. So I would just never, ever give it over the phone. All right, Frank, that was a specific California question. I don't know the answer to that. All right, so this is a follow-up boss question. Yeah, so basically you want to leave the automation plans that are on, like this one. This is a buyer lead that came into the Boston office. It goes on the Zillow action plan, which prompts phone calls and emails to go off automatically. You want to leave that on until you've talked to the person. So as soon as you talk to them, you want to shut it off, and then you want to put on an action plan that makes sense. So let's say that this person, you talk to them and they say, I'm not ready to buy a property for 2 more months. Well, now you want to put them on a 2-month delay action plan. So the action plans send off emails and they queue up phone calls, assuming that you've never talked to the person. So as soon as you talk to the person, if the action plan stays on, the next email that goes out is going to go out with the premise that you've never spoken to them. So they're going to say, oh, wow, I already talked to you. Why did you send me out an email about, reaching out to me for the first time? So you want to shut it off as soon as you talk to them, as soon as you make contact, and then put on an action plan that makes sense. All right, another one from Hugo. When wholesaling a deal to an interested buyer, say the buyer wants the property address to run comps and info on the MLS, do we give that away before the contract is signed? I would not give that away unless you know the person, because I've actually been cut out of deals that way. And there are people that I work with in my market, wholesalers that will wholesale me deals, and they know me well enough that I'm not going to cut them out of a deal. I mean, I'm not going to burn that relationship. But you just have to be really careful. And so the best thing to do is to get the property under contract first before trying to wholesale it. All right, and I think now we're going over a week back. So I've gotten through everything. For the people who are still on the line, type in any further questions that you may have. Like I mentioned, so I will stay around as long as people have questions, if anyone does have anything else. Like I mentioned, I'm going to be going live again at 4 o'clock today. Hop on if you're around just to test it out, just to make sure that I've got the technology down. And if I do, and people like it, and everybody wants me to go live every single day from now on, I will at 4 o'clock, and I'll do a really abbreviated version of this. So one thing I do want to mention is that that I've never really done a lot of on any of these calls is actually review some of the deals and some of the leads that you have. So when I go live at 4 o'clock on any one particular day, if you have a lead you want me to review, if you have a deal you want me to analyze on the phone, I'll help you do that while we're on the phone, because I do think that there is definitely a need to understand what's a deal versus what's not a deal. So I'd love it if some people would actually bring some of their appointments, you know, like literally live with me, send me the information. I can give you my feedback. Of course, I'm not gonna know your local market, but I can give you some pretty good guidance, I think, without having, without understanding a street or a specific neighborhood. I can give you some oversight on that. So, a couple of questions are continuing to come in. Talked to an agent yesterday who said they would give me some kickback if I let them list the property. What should I ask for? Typically, you're going to get somewhere between 25 and 30%. If you have your license, you'll be able to demand more. You'll be able to demand, like I get 50-50. So if one of my agents goes out, takes one of my leads, and they list the property, it's a 50-50 split. You're going to have a much harder time getting more than 20 or 25 or 30% without your license. Mike, I'm getting better with Follow-Up Boss, but not an expert by no means. Could we maybe have a webinar just on using Follow-Up Boss better? Maybe one of your daily ones. Yeah, we can definitely do that. That's actually a good idea. Let me make a note of that, because I do think there is a need for that. So next week, next Tuesday, I am doing analyzing deals. How do you analyze a deal? So I won't be able to do it next Tuesday, but I will do it the Tuesday after that. But Mike, if you do have like individual stuff that you want to hit on during any days during the 4 o'clock hour, I'd be more than happy to do it there too. But I do think, like you mentioned, there is a need to kind of learn it a little bit better. And the more you use it, the better you're going to get at it. And it really, there's probably only about 10 things that you really need to learn how to do. There's maybe 100 things that you can do, and you kind of want to forget about the other 90, because they're not going to be super helpful, and they're going to probably distract you from doing the other things well. The other thing about Follow-Up Boss, I don't know if you know this, but there are a bunch of training videos. So if you do, want to learn about any specific topic, they've got a bunch of stuff. Let me just see. I think they may have their own channel. Yeah, they have their own YouTube channel, and they put all their videos on it.
Follow-Up Boss is all about helping you.
So there's a bunch of stuff on here too, and all their trainings are really good. But I'll do one as well. All right, Kellen, meeting offer of $500K. Seller counted at $515. The house will retail for $565 to $570. No repairs are needed. The seller would like to lease the property back from the new owner for a year. Otherwise, he doesn't want to sell until next year. Any advice on how to proceed? Yeah, that's a really, really tough one, because a retail buyer isn't going to want to buy a property where they have to lease it back out, because a retail buyer is going to want to move into that property. So the only person who's really going to be able to do a deal like this is an investor. And for an investor to do this deal, they're going to need to get a real good deal to have a tenant in that property for an entire year, especially at the $500,000 mark, because at a $500,000 purchase price, you're not going to cash flow. So it's not like, let's say that this was a $200,000 property. and you could get $2,000 a month in rent, an investor could come in, rent it out to this person for a year, and if it was a good enough deal, it would be worthwhile. Um, so I don't see any sort of way that this could work easily unless the person was really willing to discount the property. And the 565 to 515 discount is barely a discount, because when you're talking about, you have a broker commission in there. Like if you were to list this property and pay 560, get someone to pay 565, he'd pay a 5 or 6% broker commission, which would effectively almost net him at that 515 anyways. So, this type of deal would only work if you had a retail buyer who wanted to pay 515 and he was not going to be he was not going to be living in there. What is the reason why he needs to stay in there for a year? Like, why would he want to sell now, stay in the property, and rent it out? All right, I'll wait for Kellen to get back to me on that, but I do think this one is kind of like quite honestly, it's really a long shot, unless the guy is willing to move out, and in that case, it would be more of a retail opportunity. So, all right, does anybody have anything else? Again, I'll stay as long as you guys need me for. If not, I'll be live again at 4 o'clock. And again, just kind of a test run for today. If everybody likes it and I get enough people, I'll continue to do it. And yeah, and so I'm going to Omaha, Nebraska on Friday. Going to check out, like I said, one of my real estate brokerage mentors, Jeff Cohn. So he's a great guy. Got a lot of good stuff going on. If you're interested in building out a brokerage, he's a really good person to follow. He does a lot of training and tutorials and stuff like that, but he actually has a brokerage that's about the size of mine, but he runs it completely differently. And so he actually does not really provide his team with a lot of leads, and he actually does more deals than me. So I'm interested to see kind of what he's got to say, and looking forward to my trip out there. But I will still be available by email and stuff like that. He's got a kid. All right, so Kellen followed up. He's got a kid going to college in a different city next year. Sounds like it's a listing when he's actually ready to move. Yeah. So I mean, I don't really see for him, like, what would the benefit there be of him even selling right now? Does he need the cash for some particular reason? Because obviously you never want to push a deal off, but I'm not really sure in this case that there's a lot of kind of I don't know that it really even makes sense for him to sell right now.
Hi, this is Jeff.
Yeah, I would. I mean, I guess I would say in general, like, I think that one is going to be tough. I don't think there's really any realistic way that you're going to be able to get somebody to rent back. I think the only thing there to do, if he'd be open to it, would just, more pitch him on renting somewhere else. But I don't even think for him specifically that would even be the best option, right? Like, the only way it would be worth it for him is if, he felt like the market was going to go down and he needed money right now. But I probably would say that would be one of those leads where I'd put into like a long-term follow-up queue and just make sure that you're the person that he's going to use when he is ready. All right, so I don't see anything else coming in, so I'm gonna jump off. And if anyone needs me, let me know. And if not, I look forward to seeing everybody live at 4 o'clock on Facebook today. All right, thank you.